Hey, Dana, welcome back to F.A.C.E, buddy. It's great to have you back. It's been too long.
Yes, thank you, sir. Can you hear me?
Yeah, I got
I
you loud
hope.
and clear.
Okay.
Yeah,
Excellent. Great to be back.
how have things been going, Dana? Relentless bull market, the big debate over inflation being transitory or not. I'm really interested in hearing what you have to say at this juncture. You want to share your screen here with that little
Sure.
green box?
Sure. All right. Um, yeah, right now, basically not, we're mostly equity guys.
Yeah,
So we've got our risk model that basically measures risk in the equity market, whether we want to be invested or not, and then where do we want to be concentrating our investments. But we do obviously track relative strength across all financial assets. Right
okay.
now, I think we're in a holding
Is
pattern.
this what you want to show, Dana? It's
Uh,
like a blank. Yeah.
yeah, I'll get
Oh,
into some
all
stuff.
right. Okay.
But equity market, I heard you guys talking about the strong equity market.
Yeah.
Some areas of the equity market are strong. If you look at, so here's our favorite broad market index, the value line geometric composite, which tracks the median stock in the market, which
Okay.
basically
Yeah.
been going sideways since the spring.
Right.
Even the large cap averages have been hitting new highs. So we've seen after following the election last year, we had a monster rally,
Right.
phenomenal breadth. Everything was going up. About 2 months ago, it did it like an about face, and we saw breadth just fall off the table. So the recent string of new highs has not been accompanied by very strong participation among the broad market of stocks, which is our concern right now. You can see the median stock still trading below that 50,
Right.
maybe setting up another down leg. So it got so bad. For example, we did a study where over a 30-day period, a recent 30-day period, there were 10 days on which the NDX, the NASDAQ 100, closed at an all-time high on negative breadth. That was the
Yeah, I
most.
saw that.
That
Yeah.
was the most days over a 30-year period of all time. It broke the previous record, which was early 2000. So whenever we get these types of breadth divergences, there's always some kind of a reckoning, at least in the short term. So we think there's going to be some more sideways, some more consolidation, some more downside. Doesn't mean those areas that are working, that are hitting new highs, can't hit some further new highs. But I think there's going to be a reckoning first, some more corrective action before more of a sustainable new up leg, which I think is coming, because technically most things are still in fine shape. I think just in the near to intermediate term, we're going to see more of a corrective action, just to
Wouldn't
put.
this be a good time for a bear raid with thinning market conditions in August before
Yeah, I
Labor
mean,
Day?
yes, seasonally it sets up perfectly as well. So there are a lot of things lining up for that. But these types of thin new highs never lead to a sustainable move to new highs. But again, we think after this corrective action, we do see more of a sustained new up leg. I mean, you look at the S&P 500, nothing wrong with that chart, obviously.
Yeah.
After the other thing that needs to be reset a little bit is investor sentiment, still a little bit too complacent. So we'd like to see sentiment reset a little bit of spike, more of a spike in fear, and a reduction in complacency. If you look at the VIX,
Yeah.
and the VIX on the Russell 2000 kind of diverging here as well. Here's the VIX holding up a little bit higher, even as the S&P hits new
Right.
highs. So, and then on the Russell 2000, RVX still holding up.
A bit above the lows from
Yeah,
last year.
yeah, hitting higher lows. So
Can you
that
explain
suggests.
to me, Dana? I don't know how
Yeah.
many times I've asked this question. Why hasn't the Russell, and I know it's made some progress here recently, trying to fight its way to new highs, but what's behind the relative weakness in Russell compared to the rest of the market? Is it, because people see more economic weakness or vulnerability in domestic stocks and multinationals? What do you think the reason is?
Yeah, you know me, Dale. I'm never looking for a reason for anything.
Okay.
We just analyze what is
What
happening and
is?
what's
Yeah.
likely to happen. So that's all
Yeah.
we care about. Why it's happening, I don't know. I will tell you this. Like I said, we expect a better markets after some further corrective action, because this is not unhealthy. You see the sideways action in the Russell
Yeah.
since like February. We had just a monster rally following the election
Right.
last November. This
Right.
sideways action is not that unhealthy, and it's not unusual. So I think a little bit more corrective action, even retracing to that 23 retracement since the COVID crash down closer to 2000 in the Russell perhaps, and then and then another up leg potentially. So this is not, I would say the breadth divergence is very unhealthy and suggestive of further corrective action here
So
in the
is it
near term. But I
distribution
don't
or
think this is,
consolidation before
yeah,
another leg up?
exactly. I mean, that would be our read on the situation, because
Okay.
typically we had such good breadth, almost breadth thrust like in the post-election move, that that is highly suggestive of eventually new highs to come. But I think given that breadth divergence, there's going to be some more reckoning and ramifications to the downside first, and then a new up leg.
Okay. Um, See what I'm sure I know you look at all different sectors, Dana. The metals really took it on the chin
Yeah.
Friday and Monday as well, and it seemed like the gold shares actually held up better. They were underperforming when gold was going up, and
Yeah.
seemed to not be hit as hard when gold got clipped. Views? Are we setting up some type of divergence here for nibbling at golds?
Right. So a similar, on a different, perhaps different duration, similar story in the precious metals market. We think of another case of a good rally. All right. So we trade only ETFs for our clients.
Right,
So we're not looking at the gold market. Here's GLD. Okay.
right,
We had a monster rally from 2015 to the highs of last year. Basically, similar highs as the all-time highs from 2011. So this action we're seeing over the last year or so, not unhealthy, not unusual, consolidating that move that we saw over the prior 5 years, right? So eventually, after some consolidation, as you would say, we see another up leg, okay, to the bull market. We see a breakout and a new up leg. Similar story if you look at the XAU. Okay, so a index of gold and silver mining shares. It's a little bit different than the GDX, but if you look at the XAU, didn't get up to the all-time highs, but what did it do? It
right,
retraced that 61% from those all-time highs in 2011. So over the
right.
last year, we've been consolidating. I think also again here, especially if gold and the GLD breaks out, then we get a new up leg here in the XAU, in the GDX. Let me find the GDX, which we trade. Similar story. See, we bounce right to that 61 retracement, almost to the penny, right?
Yeah,
So after some consolidation, GLD and gold break out to the upside, and I think gold miners do as well. In the near term, we're in a little bit of a tough spot technically.
yeah,
We zoom in a little bit. Okay, so here's the silver miners, SIL.
yeah,
Bounce obviously under a whole bunch of resistance here. We sold the rest of ours into the bounce earlier a couple weeks ago, getting into some support right now on SIL. So for a trade, we'd be buying some here in the 38 range on SIL. Same thing with, I guess I didn't open up SLV. So silver, the silver ETF, similar story. We ran into
yeah.
resistance a couple days ago on silver. Let me pull it up if I can find it here.
There you
So
go.
silver bounced up the other day right into that 24 resistance, sold the rest of our silver there. We'd be buying some here today around 21 and a half for a bounce. Okay. Might not be the low, might continue down. But again, looking at consolidation here as well, around the 38 retracement from the SLV from that after that move from the crash last year, looking for consolidation, looking for eventual new up leg there. So short term, still in consolidation for the precious metals complex, still some short-term resistance and some challenges here. But again,
So everything's pretty much the same, Dana, and listening and watching that we had that everything rallied strongly from last fall into the spring or summer and consolidating near the bottom of some of these ranges, but you're expecting continuation to the upside after
that's
this
right. Yeah,
consolidate
a
on
lot of
almost everything.
a lot of things. So here's
Yeah.
crude oil. Is the
Yeah,
GSCI
you're a
crude oil
mind reader.
index.
I was just going to
Yeah.
ask you about that. Okay.
All right, so we rallied,
Yeah.
off of that COVID crash. Here's the
Right.
GSI crude oil index, right up into those highs from 2018. So what we're seeing over the last few months, not unhealthy, not unusual. See some consolidation. Eventually, I think we do hit new highs in crude and
Okay.
put another up leg in there. But same thing. We've been in this two-way market, as we've been calling it, since the spring,
Yeah.
so to speak. And it's basically a trading market. Go for, as we've been telling people, go for singles, not home runs. You got to be selling the rips as well as buying the dips, so don't get too greedy. And it's basically a trading market. Don't expect many breakouts or breakdowns at this point to be sustained. So basically
Okay.
just trading. Another around the, if you go around the world, some interesting action in Europe. So
Okay.
for the entirety of my investing or money management career, which is about going on 30 years now or so, basically have been avoiding Europe because it's
Oh,
never looked that good. Still kind of
what are you looking for? DAX or
I no, I'm gonna pull up uh, the stock 600
okay.
index in Europe. Um, which is avoiding me at this point. I'll pull it up here. So
Is it dollar related?
what
Yeah,
I don't
or
think so
okay.
because okay, here. So since the 90s, since I entered my investment career, basically the SOX 600 has been going sideways.
Yeah.
Finally broke out, above all those peaks just recently. The
Good pay.
interesting
You know
thing
what,
is,
Dana? What
yeah,
great patience you had to wait 30 years to get long.
exactly.
Huh? That
Uh,
really is excellent
Yeah,
patience.
and if you look fundamentally, I mean, things are in shambles over there. They have been ever since
Yeah.
I started in this business. But again, you don't argue with price. And about the best looking charts around the world are the European markets, which I can't explain. That's just how it is. So Europe, the stock 600 going nuts to the upside. You mentioned a currency, the currency effect, where it does come into effect, I think, is in these the U.S. based ETFs that track the European
Oh, okay.
equities. So we
Yeah.
do see after you look at this Vanguard European ETF VGK, the ticker symbol. So this one was doing great off of the low at around the election. Just recently, it's been lagging because of the kind of the
Delta.
pullback in the euro. So we've had
Okay.
we got lower highs going there. But if you use that hedged currency ETF, HEDJ is the ticker symbol, you can see that hedges out the currency risk. This one's going to new highs, just like the stock 600. So
Wow.
if you look around, around Europe, and one area in Europe that gets overlooked. For some reason, but has been working for actually the last almost a decade or so. You look at some of these Northern European indices, which is much different story than core Europe, the DAX and France and whatnot. You see like Switzerland been hitting new highs for a while. You go to Finland, been hitting new highs for at least the last half a decade. So Northern Europe, about some of the best looking charts in the world right now as well, even as core Europe is starting to break out and look good as well. So again, there's no fundamental reason for me to like Europe, but they are among the best looking charts in the world.
Okay. So last Friday, after the NFP 10-year yields, the day, I believe the day before, had retested the 113 level and then reversed strongly with nice follow through this week. To me, that looked like the end of the consolidation after the big run up to 178. I'm wondering what you're thinking here.
Yeah. Going back, we zoom out a little bit, going back hundreds of years, there's very reliable, approximately 60-year cycle in interest rates. Okay, so that was due to bottom like 10 years ago. So maybe the intervention, central bank intervention, to feed into some of the narrative has forestalled that bottom in interest rates and kind of prolonged the depressed run in the lower for longer type of move in interest rates. We think maybe last March was finally the low, and we think interest rates go up for a long time, for many years, many decades even, perhaps, and much higher. Obviously, it's not going to be straight up. So we had that nice bounce off of the lows from 2020, right? This move, again, like many markets, like you suggested, maybe just a little bit of a retracement, some consolidation ahead of the next up leg. So did move up right up to some of the levels we were looking at in the 10-year. Right now up into some resistance here around that 137 level, perhaps, but maybe a low right here. I would say the next level, once we are out of this consolidation, next level we're looking at is around 215 on the 10-year and the 30-year. Similar story, ran right up, I guess in March towards that 245, 250 level. We're looking at consolidating right now. In short term, we would not be pressing our shorts here into a bounce into that call it 2% to 205 level, some resistance here in yields in the 30-year yield. Once this consolidation is over, though, yes, I think we do test that 250 level again, and then the next leg up would be up towards closer to that 350 level eventually. But yeah, after again,
and markets and all the markets you talked about previously, Dana, continue to advance despite rates going up. In fact, except for maybe some mega growth, I believe there's the, you spoke to the negative divergences in NASDAQ, that perhaps the FANGs and some of those names are the most vulnerable to higher interest rates.
Yeah, I mean, that's what the narrative is, right? And yet we see, okay, we've been two of the sectors that we've been heavily concentrated in. So we're not big among diversifying unless those areas are working. So the areas we've been concentrated in lately have been healthcare and technology, because those are the ones that are working best despite the rising rates. I guess just recently we've seen obviously rates come in, which has maybe helped perpetuate the recent run in technology. But again, we're going to concentrate in the high relative strength areas, which recently has been technology and healthcare. So you look at here's software continues to run to new highs. IGV, the ticker symbol. This one, cybersecurity, CIBR, the ticker symbol, running to new highs. These are vulnerable here in the short term, only because if we do get a reckoning and more downside action based on the breadth divergences, obviously these are the areas that are extended. XLK technology, I mean, I spoke of Europe. Domestically, the tech sector has some of the best charts in the world. Obviously, near term, extended a little bit. Here's healthcare running up to new highs like day after day. Here's the internet, one area in tech land that's not extended. Could buy it right here. FDN, the ticker symbol on internet, still hitting higher highs in the intermediate term, so nothing wrong there. So yes, vulnerable perhaps in the short term, especially if we get some sort of reckoning, like I said. But overall, healthcare and technology continue to be two of the best sectors. I would say also another interesting thing, if you look at interest rates bouncing back over the last week or two. If you look at financials, which had
they
been
like it.
bouncing, yeah, obviously they like it. The interesting thing is financials are back up to, if you look at the XLF, back up to testing their former highs already, even as yields are obviously well off their highs. So maybe this bodes well for a further upside in yields, but setting up for another up move, we think, is XLF. So if we get a little bit of a pullback here, which might happen given some of the numbers,
inflation
the
number was a
economic,
little weaker.
yeah. So I'll pull back down towards that upper 36 range, 37 range on XLF, sets up a nice entry point perhaps in XLF. And if you look at the broker dealers, continue to run up to new highs. So this one, IAI, the ticker symbol here, has been working great for us. Another one in the biotech space that is setting up again for perhaps new up leg. You look at IBB, the biotech ETF, after a prolonged correction after hitting those highs in February, coming back up to test those highs. Looking for a pullback here to about 165 or so on IBB, sets up a great entry point for maybe another leg up. So healthcare, technology, it still look good. In the near term, financial setting up again.
Buy breaks, stay long the world. Dana Lyons. Right?
Yeah. I mean, right now going for singles, trading this range in most assets. Buying the dips and selling the reps, take some profits. Don't go for the home runs right here, but in the long term, we see in more up legs eventually in most of these assets once this consolidation is over. So it's kind of a frustrating market if you're not trading it at the moment, but further up legs that come. I think one more, I'll tell you one more big time potential around the world, if I can find this. So I think last year we talked about it when I was on one of my wild card markets last year. I think it was in 2020, was Taiwan. So we had going into 2020, I'll cut that off. We had about almost a 30-year sideways move that was testing the top of that move. You can see we did get that breakout, and now we're seeing a monster move to the upside. That's consolidating now. I think the next one in line is Vietnam. I'll show you one more interesting chart. Would be Vietnam maybe setting up for that next major opportunity in some of those smaller cap or smaller market emerging markets. We had that look at this cup and handle kind of going back to 2007. Did get a breakout this year, pulled back, tested that breakout level, might get another test of that breakout level. But if you look at that breakout on a long-term scale, I mean, this is setting up for maybe massive upside here on the order of that Taiwan breakout. So you're looking for a good speculative opportunity. Look at Vietnam. So there is a ETF here in the U.S.
Maybe
VNM.
before I watch another rerun of Platoon, I'll pick some up.
Well, I mean, there's
One of my
there is
favorite
that.
war movies.
Yeah, I mean, you ask
Yeah,
me
so
about
I
like
mean that
reasons and fundamentals, and I don't get into all
it's so
that.
amazing, you know, when
Yeah,
you look back in history. I mean, look at the Olympics and what was happening 70
exactly,
years ago, and
exactly.
it's amazing. So
Yeah.
Taiwan is going to be the beneficiary of perhaps the restructuring and slowdown in China. You have any opinion on what the Chinese government has been doing, and is that an avoid for you? Anything in China?
China is one of the markets that we don't like. Um,
Okay.
one of
So
the
I found
few.
one.
One of
Took
the
me the
few.
whole
Yeah.
interview to find one. All right.
Well, I mean, here's the Shanghai Composite. I mean,
Yeah.
there's not a whole lot to like there.
Yeah.
Sideways at best, lower highs. Still hitting lower highs right now. It would be we would be selling it right here, the Shanghai Composite, hitting
Okay.
resistance. If you want to short it, go for it. This is one that we would be selling. Most of the markets we'd be buying the dips on the intermediate term. This one is the one we would be selling rallies into resistance. So yeah, you did find one, the Shanghai Composite we'd be selling right here.
It was great talking to you, Dana.
Yeah, likewise. It's always a pleasure.
Yeah.
Sorry, I think we had a mix up. I
Yeah.
got the time wrong last time, so I
That's
apologize
okay.
for that.
Well,
But
you know,
always a pleasure talking to you.
yeah, I really appreciate your looks and your discipline. I knew you when you came in here. I kind of had an idea of what you were going to be saying, but I always like to look at your charts and get your perspective. And thank you, my trading warrior brother, for sharing your work with us today.
Yeah, thanks for having me on. It's always a pleasure.
Best way for people to reach you would be Twitter or your website. Which one?
Let me go to my website.
Okay, Anthony Konecka said great interview. Thank you. Monica saying thank you. So
Let me see if I can.
Dana is an RIA. His firm does manage people's money in the equity market. So there you
Yeah.
go.
All right. So yeah, we have our core business is money management. So we do have an RIA. We also have this subscription service for traders, active traders who are do-it-yourself traders, the lion's share of it. So I give a pre-market video and strategy video before the market every day. So it basically tells you and tells our members what exactly we're looking at and what we're looking to do. So it's really an all access view of what we're doing. So lionsharepro.com is where you can find that. And we also have a couple other, if you go to About Us, we've got some other services. One for 401k investors is my401kpro.com. But for our management business, jlfmi.com, you can find more information. And then on Twitter, J Lyons Fund Management, you can find us there.
Invest with the heart of a lion. Dana Lyons Fund Management.
You should be my marketing guy.
Anyway, I like that. So thank you very much, Dana. Great to have you. I'll be in touch and we'll keep you in the rotation. Okay, buddy?
Sounds great. I'd be honored.
All right. Dana Lyons, everybody.
Take care.
All right. So that's a wrap. See everyone for tomorrow's Thursday session. Remember, join the team in 15 minutes for the morning edge. You get to check out the bias chart and ask questions of Blake and the whole team. Thank you for your attention today, everyone. Remember, don't just count your pips, count your blessings. You're welcome, Sinatra. Adios. See everyone tomorrow.